There are many ways to approach the crypto markets. I personally like to use statistics. I like to use approaches and rules that tended to work well in the past. Now we see here in the background, that's the Ethereum price together with the historically best moving average. So I have run back tests and I tried to figure out what kind of moving average works the best to bet on rising prices whenever we are above the moving average and to bet on falling prices whenever we are below the moving average. Now the white line that we see over here, that's the 34-day simple moving average. Not a very common moving average, but one that historically worked very well. If you sold whenever we were below that moving average, you would have avoided a lot of the bear markets of Ethereum. So what we see here in turquoise, that's the performance of the backtest. What we see in white, that's buying and holding Ethereum over the same time period. Now, instead of just going into cash and having a completely flat portfolio line, we can also bet on falling prices whenever we are below that moving average. And then we get this portfolio return instead of this one. And so I've run back tests for all moving averages up to the 200-day simple moving average. From 2 to 200, buying and holding would have given us the return that's indicated by the black line. And again, the 34-day simple moving average historically worked the best. If we go too short with our moving average duration, then the trading fees eat up any edge. If we go too long with our moving average duration, we tend to get closer and closer to just buying and holding. But in the end, we time the market in order to outperform. We have to still be reactive enough to the movements. Currently, we are above the moving average. By the way, $3,048 is the current level. Now there's a way to enhance the performance even further, and that's by using leverage. Now leverage also has some risk. Once we take too much leverage, we can lose everything, right? We can get stopped out, we can get liquidated. But if we are rather modest with our leverage, we can have a better risk to reward if we time the market properly. And so the green line shows the annualized performance based on different leverages for the long positions, so when we bet on rising prices, and red, that's the best leverage when we bet on falling prices. So when we take those optimums for long and for short, then instead of getting this performance, we get this performance. Now, is this the performance that's going to prevail in the future? Of course, nobody knows. We can already see some kind of a diminishing return here, at least in terms of outperformance. But at least this is a rule that historically worked very well for Ethereum. Now, that's just for timing the market in terms of US dollars. There is a chance that Ethereum will go up, but I'm not really sure if Ethereum will really outperform the rest of the market. It might outperform if we time it properly, but if we just bought and held Ethereum, and if we just compare ETH to the rest of the market, I do have my doubts, and here is why. This is the Ethereum dominance. This shows how much of all of crypto is currently in ETH in terms of market cap. When this is very low, then Ethereum has a comparatively small market cap compared to the rest of crypto. When this is very high, then Ethereum has a high market cap. That's when we might want to take some profit and put this into other cryptocurrencies. What we see over here, that's the merge from proof of work to proof of stake. Many people sold Ethereum after that event, and that selling pressure has then stopped once we reached the 7% mark in dominance again. This is also where a new narrative popped up. Ethereum outperformed the rest of the crypto market because of the treasury companies. Because Tom Lee became for Ethereum what Michael Saylor is for Bitcoin. Tom Lee has Bitmine, and Bitmine acquires Ethereum constantly. And there are other companies that followed. Now we can see how the rate of acquisition used to be quite constant up until the end of October. If we remove Bitmine from that picture, then we can already see how all the other Ethereum reserve companies stopped the acquisition at the beginning of September. When we look at the Ethereum ETF holdings, they have peaked at the middle of October. And so that explains why Ethereum dominance is having a hard time for the last few weeks. It's now in a somewhat constant downtrend, and we are very close to a resistance here. I think Ethereum will very likely do worse compared to the rest of crypto. I'm not saying that it will go down in US dollars. I'm simply saying it's likely going to go up less quickly than the rest of the market. Because here's the fundamental question. Who is going to be the marginal buyer for Ethereum? There aren't a lot of new retail investors entering this space, so it's mainly institutions that are buying. We do not see any demand by the ETFs, and Tom Lee's Bitmine is probably also going to reduce the rate of purchases. Here's why. Check out the MNAV premium, as in what's the enterprise value of Bitmine relative to the Ethereum that's been held. And there's actually a discount on the Ethereum. If you buy Bitmine stock today, you buy your Ethereum indirectly with a 3% discounted price. And that's a problem. Tom Lee is not incentivized anymore to sell shares in order to buy more Ethereum because that indirectly destroys value. I don't really like doing it, but that's how the YouTube game works. That's how the algorithm works. Please give this video a like if what you've seen so far has been useful. Thank you very much. Michael Saylor is in a slightly better position. His MNAV premium is at 5% above the Bitcoin holdings. So Michael Saylor can still buy Bitcoin and make a slight profit on that. And so if there's no marginal buyer for Ethereum, but there are marginal buyers for Bitcoin, Ethereum relative to BTC, I think has a good chance of going down. Interestingly enough, that chart, ETH relative to Bitcoin, looks quite similar to the ETH dominance chart. So very often the majority of the capital just moves from Ethereum to Bitcoin and from Bitcoin to Ethereum. Again, ETH might be going up from here, but Bitcoin will likely appreciate more. That's at least my stance looking at the data. Now, what about the altcoins though? A lot of altcoins are highly correlated with Ethereum. They're more correlated to Ethereum than to Bitcoin. So when Ethereum is going up, many altcoins go up as well. When Ethereum is going down, many altcoins go down. But there are shifts between Ethereum and the altcoin market as well. Fundamentally, the tokenomics of Ethereum are quite sound right now. The inflation rate is very similar to Bitcoin's. It's at 0.8% per annum. Ethereum's market cap is at 383 billion. So that makes potential weekly sell pressure of 58 million in ETH. That's how many new ETH get created every week. This is not much compared to the altcoin market. The altcoins that are tracked here on Tokenomics.ai have an inflation of 700 to 800 billion per week. So that's more than 10x the potential sell pressure of Ethereum. But here's the problem. The effect that the altcoin supply is growing long-term is a long-term effect. It doesn't necessarily say what's going to happen in the next weeks or months. If we don't compare prices, if we just compare market caps, then we've got here the Ethereum market cap relative to the others market cap. The others market cap is the market cap of all the altcoins that are not in the top 10. And Ethereum currently has a market cap that's roughly 1.74x the market cap of the smaller altcoins. So it's a bit under 2 times larger, but this ratio tends to trade in a range. We entered that range at the end of 2017, and the average ratio still implies that Ethereum might underperform by at least another 12%. Potentially, in the worst case, we could see underperformance of 48%. Now, if Ethereum is likely going to underperform, why would it still go up in terms of US dollars? Now, first of all, the moving average is just measuring momentum. But there's not just momentum in the price, there's also momentum in the usage of the network. So there is a fundamental story that justifies a higher ETH price. This is the number of transactions on the Ethereum network. It's a 7-day moving average and it's at an all-time high. Here's the number of active addresses on Ethereum. It's also at an all-time high. Now this is to a degree a double-edged sword because whenever the number of active addresses went down, the Ethereum price tended to go down with it. So is this just long-term growth? Or are we short-term a little bit too active? Only time will tell. Now, what's very positive is that this additional load on the Ethereum network does not lead to bottlenecking again. There is enough capacity. The fees on the Ethereum network are not spiking despite the additional activity. This is the average transaction fee on ETH. It's close to an all-time low. And so when there's this long-term growth in Ethereum, why doesn't the price go beyond $5,000? One reason is that the average investor doesn't buy and hold Ethereum anymore. Here's the number of ETH addresses that own at least one ETH. There was very constant growth up until the end of 2022. Since then, the number of such addresses is coming down. If we go one order of magnitude up, so a minimum holding of 10 ETH, that has peaked at a very similar level. Here is 100 ETH. That has peaked much, much earlier. And here is 1000 ETH. The Ethereum whales are already selling since July of 2018. And so it's quite fascinating to see more transactions and more active addresses, while at the same time, we don't see any new long-term holders of Ethereum. Historically, it was the best time to buy Ethereum when the majority of holders were in unrealized losses. That's what we see over here, the percent of ETH that's in profit. Whenever we are below 50, it's a good time to buy. That was also true in April of this year. That's when we got the treasury company narrative and ETH outperformed the rest of crypto by more than 100%. But now the majority is in profit. This doesn't mean that we have to crash from here. Again, I do think that the US dollar valuation will go up as long as we stay above the 34-day SMA. And of course, the situation might change tomorrow. It doesn't take too much of a decline to flip that short-term momentum again. We have to be flexible with our assessment. So it's strong opinions loosely held. But independent of whether or not Ethereum will go up measured in US dollars, I don't think that it's the best bet relative to the rest of crypto, especially relative to Bitcoin. For Bitcoin, we do see the ETF balance continuing to go up. For Bitcoin, we do see the treasury companies continuing to buy Bitcoin. We do not see this for Ethereum. For Ethereum, the demand is much more volatile. It's much more risky to get into ETH. It looks like the treasury company story has run its course and people are now constantly taking profit. That's at least where I currently bet my money. I'm betting on Ethereum to underperform Bitcoin. If you got some value out of this video, feel free to give this a like. Feel free to also subscribe. I publish videos regularly. If you want to join the premium membership here, that's where I share my own trades. This is where you can also invest into my own trading. And feel free to check that out over here. There should be a link popping up on the screen. See you next time in YouTube or see you on Premium. Cheers.